Something is cracking underneath the Kremlin, and the sound is getting louder. Most people in America are still operating with a mental image of Putin as this invincible, iron-fisted ruler sitting comfortably on a mountain of oil money, immune to consequences, untouchable by the pressures of a world pushing back against him. That image is now dangerously out of date. Because right now, in the real world, away from the propaganda bulletins and the carefully choreographed press conferences, something is happening inside Russia's financial system that the Kremlin cannot fully contain, cannot fully explain away, and is beginning to struggle to even hide. There is a slow, grinding, compounding crisis building inside the banking sector in Moscow and across Russian cities, one that starts not with governments or generals, but with ordinary Russian citizens who simply cannot pay back what they borrowed. And when the people cannot pay, the banks bleed. And when the banks bleed long enough, even the most powerful authoritarian on the planet starts to feel it. This is the story that matters right now, not just because it tells us about Russia, but because it tells us something profound about how power actually works, about how empires actually fall, and about what happens when a government bets everything on a war machine while the financial floor beneath its own citizens slowly gives way. Let's start from where this really begins. Not in some Washington think tank or a Brussels policy meeting, but on the ground in Russia with the people. Russian data shows that unpaid wages nearly tripled in October of last year compared to a year earlier, with furloughs and shorter work weeks becoming more common across the country. Think about what that means in practical human terms. You're a working Russian. You took out a loan, maybe a mortgage, maybe a car loan, maybe a consumer credit line, at a time when the economy seemed to be holding together, when military spending was pumping money into certain sectors, when the official numbers still looked somewhat respectable. And now your wages are late or cut or simply not arriving. The total amount of overdue debt in Russia has risen to 1.5 trillion rubles, roughly $19.2 billion, a record high in the last 6 years. That's not a rounding error, that's not statistical noise. That is a society under financial strain at a level it hasn't experienced in recent memory. And here's what's critical to understand about how this compounds. When citizens can't pay their loans, it doesn't stay a citizen problem, it becomes a bank problem very quickly. Officially, overdue loans reached 10.5% for households and 4% for businesses in the first quarter of 2025, but insiders say the true picture is far worse. Let me sit with that for a moment, because insiders say the true picture is far worse is one of those phrases that should stop you cold. These aren't critics from outside the system. These are people inside Russia's banking establishment quietly admitting that what's being reported publicly does not reflect reality. Bloomberg sources within the banks reveal that much of the apparent stability is a facade, propped up by creative accounting and political pressure. One insider put it with striking bluntness: everything is not as good as it looks on paper. That phrase, from a senior figure inside one of Russia's major financial institutions, deserves to be treated as one of the most significant economic admissions of this entire war period. Now let's talk about interest rates, because this is where the mechanism of destruction really becomes clear. To fight inflation, which had been running dangerously high as wartime military spending pumped enormous amounts of money into the economy, Russia's central bank governor Nabiullina has been keeping interest rates very high, trying to rein in consumer and corporate lending amid soaring military spending that keeps inflation stubbornly high. The key rate was sitting at 21% at certain points. Just pause and let that number land. 21%. Headline interest rates, which were trimmed to 20% in June, are a ticking time bomb for Russia's economy. While they help contain inflation and prop up the ruble, they choke the economy by making credit unaffordable. So here you have a central bank that is essentially trying to prevent the economy from overheating while simultaneously being pressured by a government that needs to keep spending massively on the war. Those two objectives are fundamentally at war with each other. And ordinary Russians and ordinary Russian businesses are caught in the crossfire. Over 55% of loans in Russia now carry floating rates, and with interest rates staying high far longer than expected, many companies are slipping into pre-default. According to VTB chief Andrei Kostin, some companies are now borrowing solely to pay interest on existing debts. Read that again. Some companies in Russia are taking out new loans just to pay the interest on the old ones. That is the definition of a debt spiral. That is what financial collapse looks like in its early stages. Not a dramatic crash, but a slow, grinding, increasingly desperate cycle of borrowing to stay alive while the hole only gets deeper. In 2024, Russian companies paid banks $145 billion in loan interest alone, an 83% increase compared to 2023. In 2025, companies already paid 95 billion in interest. These are not abstract numbers. These are resources being drained out of Russia's productive economy, out of factories, out of construction projects, out of small and medium businesses, and funneled into servicing debt at rates that were set artificially high to try to manage an economy distorted by war spending. As of the end of the third quarter of 2025, 1 in 4 companies with loans had missed payments. The number of legal entities with overdue debt rose to 165,000, up by 41,000 since the start of 2025 and by 100,000 compared to 2022. 1 in 4. That is not a sector in trouble. That is an economy in systemic distress. And the banks? The banks are now at the center of this story. Bank, a key lender to Russia's defense industry, posted a net loss of 19.2 billion rubles for 2025, reversing a net profit of 65.3 billion rubles in 2024. The bank set aside nearly 300 billion rubles in loan loss provisions in 2025, roughly 3 times more than in 2024, as borrowers struggled to service their debts. This is the bank that funds Russia's defense sector. The very machine that is supposed to be financing the war effort is posting losses and tripling its bad debt reserves. The irony is almost too precise to believe. The financial institution most central to Putin's military ambitions is itself a victim of the economic consequences of those ambitions. Credit Bank of Moscow, Russia's 7th largest bank by assets and holder of around 700 billion rubles in household deposits, reported a net loss in the fourth quarter of 2025. Between January and September, the volume of overdue loans on its balance sheet surged by 700% to 668 billion rubles, equivalent to 28% of its loan portfolio, 700% in 9 months. That is a catastrophic deterioration, and it is happening inside one of the top 10 banks by assets in the entire country. Payment defaults affecting defense manufacturers, metals producers, construction firms, and even oil and gas companies have effectively triggered a banking crisis in Russia, according to experts at the government-linked Center for Macroeconomic Analysis and Short-Term Forecasting. The crisis is unfolding in a latent form, they said, as banks restructure troubled loans and the state dominates the financial system. The word latent is doing a great deal of work in that sentence. What it means is that the crisis is real, it is happening, but it is being deliberately obscured. Loans are being restructured rather than declared non-performing. The accounting is being managed, the optics are being controlled. But the underlying reality cannot be restructured away. At least 3 of Russia's 13 systemically important banks are seeking bailout talks, with giants like VTB, Alfa, Gazprombank, Raiffeisen, and Rosbank fitting that description. Even one collapse could trigger a financial crisis. 3 would be catastrophic. Think carefully about what a systemically important bank means. It means a bank whose failure would send shockwaves through the entire financial system, the kind of institution where collapse is not contained, where it ripples outward and takes other institutions down with it, where ordinary depositors wake up and discover the money they thought was safe is suddenly inaccessible or gone. The fact that multiple banks of that magnitude are quietly having conversations about needing government rescue is something that would be dominating headlines in any other country. In Russia, it is being managed in the shadows. And what does Putin himself know about all this? Officials in Russia's financial and economic policy bloc warned President Vladimir Putin late last year that the banking system was coming under pressure from high interest rates and the growing volume of loans linked to wartime spending. According to a source close to the government, Putin was warned that the strains could trigger a broader economic crisis in the coming months. He knows, he has been told directly. A Russian official told the Washington Post recently, on condition of anonymity, a banking crisis is possible, a non-payments crisis is possible. I don't want to think about a continuation of the war or an escalation. The people inside the system are terrified. They are saying quietly what they dare not say publicly, that the war and the economic trajectory it has created are incompatible with the stability Putin claims to be defending. And what does Putin say publicly? At the St. Petersburg International Economic Forum, Russian President Vladimir Putin told attendees that rumors of the Russian economy's death are greatly exaggerated. Meanwhile, at that same forum, Russia's economy minister Maxim Reshetnikov said, "Based on current business sentiment, it seems to me we are on the brink of transitioning into recession," and the head of Russia's central bank acknowledged that many of these resources have really been exhausted. His own ministers at his own showcase economic conference were contradicting the narrative he was putting forward in the same building at the same time. That is not a functioning command structure. That is a system beginning to fracture at the seams. Russian economist Igor Lipsitz has said that a positive scenario is practically impossible for Russia's banking system by the end of 2026. For a positive outcome, there would need to be an inflow of funds into the banking system. And the obvious question is where that would come from. That is the question that has no good answer. The sanctions have dramatically reduced access to Western capital. Oil revenues are under pressure from falling prices and targeted sanctions on Russian energy companies. The domestic economy is weakened by inflation, high interest rates, labor shortages caused by the war, and a massive misallocation of productive resources toward military spending. There is no obvious source of rescue capital. Without large-scale recapitalization of the banking system or a mechanism to shift corporate bad debts onto the federal budget, a crisis scenario appears almost inevitable, involving mass corporate defaults and a subsequent explosive rise in non-performing assets at banks, Ukraine's Foreign Intelligence Service concluded. There is also the structural reality of what this war has done to the labor market. Russia has lost enormous numbers of working-age men, killed in Ukraine, wounded, fled the country to avoid conscription, or now wearing a uniform instead of building something productive. Russia's top construction executive warned that the industry is heading for a wave of bankruptcies as sky-high interest rates cripple access to capital. The construction sector is particularly important to understand here because it sits at the intersection of everything. It employs enormous numbers of ordinary workers. It is deeply tied to consumer lending and mortgages, and it is now visibly collapsing. Samole, one of Russia's two largest real estate developers, is reportedly on the verge of bankruptcy and has asked the state for 50 billion rubles to repay bank loans. Housing sales have stalled, new mortgage programs are being curtailed, and a property market long inflated by subsidized lending is losing its final supports. When the property market goes, the banks that hold the mortgage loans go with it, and the households that took those mortgages, who were told that real estate was a safe place to put their money in an uncertain time, they go with it too. Russia could face a systemic banking crisis by October 2026 if problem assets continue to rise and depositors start withdrawing funds en masse, according to analysts at the Kremlin-aligned Center for Macroeconomic Analysis and Short-Term Forecasting. Preventing the fallout would require restructuring or nationalizing more than 10% of banks or providing support equal to more than 2% of GDP. Let that sink in. This warning is not coming from Western think tanks with an interest in talking down Russia. It is coming from a Kremlin-aligned research institution. These are people who are embedded in the system, who have access to the real numbers, and who are now publishing, even if carefully, even if in measured academic language, that the probability of a full systemic banking crisis by late 2026 is assessed as medium. In the language of risk analysis, medium for a systemic banking crisis is a 5-alarm fire. If the central bank loses independence and shifts to a policy of fiscal dominance, prices will rise, businesses will close, and citizens will have a much greater motive to support the war. After all, the army will feed you and give your family a hefty package of benefits if you die. That observation, from a Russian writer and journalist, cuts to something deeply uncomfortable about the logic of this system. The war is not just a geopolitical event. It is also, in a perverse, brutal way, an economic safety valve for a government that has run out of other answers. If you cannot pay your workers, if your businesses are collapsing, if the banks are in trouble, you can always offer young men a signing bonus, a military salary that exceeds what they could earn in a failing civilian economy, and a promise of benefits for their families. The war machine feeds on economic despair at home just as surely as it feeds on territory abroad. The head of Russia's largest bank told Putin directly that some of its portfolios are shrinking as a result of the war's ongoing economic toll. That conversation, a bank CEO sitting across from Vladimir Putin and telling him, to his face, that the money is running out, is the kind of moment that does not make it onto state television, but it happened. And the fact that it happened tells you everything about where Russia actually is right now, as opposed to where the Kremlin would like the world to believe it is. Putin himself shifted his language dramatically between 2022 and 2024. In December 2022, he told the Ministry of Defense, "We have no limits whatsoever on financing. The country and the government will provide everything the army asks for." By December 2024, he was telling that same body, "We cannot keep pumping up defense expenditures to infinity, increasing them without limit." 2 years. That's how long it took for no limits whatsoever to become, "We cannot keep doing this." The math caught up with the rhetoric, as it always does eventually. What we are witnessing is not the sudden collapse of a rogue state. What we are witnessing is something more instructive and in many ways more significant: the slow, grinding, irreversible financial erosion of a system that tried to fight a 21st century war on borrowed money, borrowed time, and borrowed credibility. The pressure is radiating outward from the citizens to the banks, from the banks to the broader financial system, from the financial system upward toward the Kremlin itself. Credit rating analysts report that 20% of Russian bank capital is linked to borrowers with a high risk of default, with analysts projecting a moderate probability of a systemic banking crisis by mid-2026 if credit conditions continue to deteriorate. The walls are closing in, and the timeline is not abstract, it is measurable. It is being tracked by the very institutions that serve the Kremlin, and they are afraid. The power structures that seemed so solid, so permanent, so immune to outside pressure are discovering what every empire before them has discovered: that you can manage the optics of failure for a surprisingly long time, but you cannot manage the math of it forever. The numbers in Russia's banking sector are now telling a story that no amount of state media management, no amount of creative accounting, no amount of carefully worded central bank reassurances can fully suppress. The citizens are broke, the banks are bleeding, the defense sector's own financial institution just posted a catastrophic loss, and the Kremlin-aligned think tanks are quietly circulating reports that say a systemic crisis is no longer a remote possibility. It is a medium probability event on a specific timeline. This is what geopolitical shifts actually look like from the inside. Not a dramatic moment, not a single event, but a compounding, cascading, accelerating series of pressures that eventually become impossible to hold back. And when they break fast. The question now is not whether Russia's financial system is under severe stress. That question has already been answered. The question is what happens when that stress crosses the threshold that even the most disciplined authoritarian system cannot contain.